recipes for technical trading success in Cook's Kitchen.
Has the correction started? I think it has. When we talked about this 2 weeks ago, I said the worst we'd see in August was S&P 2700, and that was after another big bear call from Morgan Stanley calling for a 10% correction, which would be all the way down below 2600. Let's go to the charts that tell the story. Okay, so here was the chart I showed you on August 1st after Morgan Stanley's July 30th call calling for a 10% correction. My conclusion was, hey, see this this resistance up here? We just got to back up to 2850 and fell back. I said we're going to have a hard time getting through 2850 again. I don't see a 10% correction. Is what I said. I said the worst we see in August is maybe come down to tag, the 200-day moving average and this support area here, S&P 2700. All right, so this was August 1st because I didn't see a big catalyst for a big correction. All right, and here was the Morgan Stanley call just for review. This is what I showed you on August 1st. This was a summary article in Dow Jones. We think the selling has just begun. Okay, so what happened? We actually we got back up through S&P 2850. So here's the chart today, but showing in early August, by the second week of August, here we were making new highs above this candle, S&P 2850. But yeah, it was kind of getting sold, wasn't it? And then we've had successive days of issues with Turkey or whatnot, contagion, and back down to S&P 2800. What else is worth noting here? Not much else. Let's just keep going through the charts. So I'm going to give you my thesis for the 5% adjustment. That would be down to almost S&P 2700, and it could take us into September. And that's about that's as big as you can forecast right now. Everybody wants to be a hero and make the giant forecast, and then if they're wrong, so what? If they're right, they hit a grand slam. I tend to say let's look out, 3 to 4 weeks for short-term market timing, and we can make our bigger calls based on the economy, fundamental tailwinds, and stocks we like. Those can be longer-term investment calls. All right, so here's my 5% adjustment call. And this would take us down, 5% off of 2860. We'll call these tops here. They were like 2862, 2863. We'll just call it 2860. 5% off of that takes you down to about 2717. 200-day moving average will be, rising, maybe flattening into that. Wouldn't be surprised to see that at all. And then you still have, this support area to lean on coming in here just above 2700. So that seems pretty doable. All right. So let's look at now we'll run through the same charts I went through 2 weeks ago. I will look at the NASDAQ, we'll look at the Zacks, we'll look at the industrials, and we'll also take a look at sentiment. All right. So here's your NASDAQ 100. This is what's holding up the market, folks. And this big pop here, this was Apple, because Apple reported on July 31st. So August 1st, big day for Apple, takes the NASDAQ higher. But look can't even make a new high in the NASDAQ 100. All right. And this is also, obviously this is Amazon, this is Google, this is Microsoft. It's also a lot of big cap biotech. Biogen comes back, Regeneron comes back, Gilead and Celgene are doing okay. So those are part of the big story in the big cap 100. All right, what's not looking so good? Definitely the Zacks index. Down here, about to slice through its 200-day moving average. Could never make a new high versus the recovery highs of May. All right, next, industrials. 200-day and 50-day are living together here at 74.50, and this doesn't look good either. This is is this forecasting a global recession? I don't know. It's not like interest rates are that big of a headwind. Okay, so now we'll go to sentiment. Remember I showed you 2 weeks ago on August 1st, I said, let's look at investors' intelligence sentiment. It's not, it's not super quantitative. We're not looking at the fundamentals in the market. We're just using sentiment. And we use this survey because it's so old and established. So you've got a good, sample of over 3 decades of data to look at. And these are the newsletter writers. So they can be indicative of, they're semi-pro, somewhere between a fund manager and the retail trader, and they influence the retail trader. Okay, so what do we want to notice here? We're still living in a ratio of 3-to-1 bulls to bears, and look at it, really hasn't moved. If you zoom in or stop, you can see this data. This is all just below 3, 2.95, 2.9, and this is 3 surveys. So, you basically call it 3 weeks of data, July 24, July 31st, August 7th. We'll get new data tonight. Tonight or tomorrow, the survey gets published. And that's so since this isn't moving, that's what we want to see. So let's go to the next chart, which is, it breaks it out, the percentage of bulls and bears. Whoops, went one too far here. So bulls, again, July 24, July 31st, August 7th, it's all hanging out around 55% bulls, 18.7% bears. Hasn't moved in 3 weeks. We want to see this move. We want to see the bulls capitulate a little bit here, and the bears start getting grisly. Same thing here, down for correction territory. 3 weeks of data, living at 26.5% are calling for correction. We want to see that spike up. So we want to see that spike up above 35, as we wash out bullish sentiment. And I think that's what needs to happen here. Let me go back. I think I forgot something I wanted to show you on one of my charts here. I think I made everything clear. I was going to mention Micron. Micron, incredible value stock, part of the AI information data economy, and that stock is getting killed today, down to 47. And, is this China? Is this, global recession? Its stocks are getting really whacked right now. And so when you see those leaders, when that's happening, I think there's more follow-through pain. So the best I can say right now is, get your helmets on and get ready for a rocky August into September. All right, thanks for joining me in the kitchen.